Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market. Then we will move to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that at the moment the market has just entered inside of a quite strong historical structure level for this market. In fact, this zone was acting as previous resistance here, again started acting as resistance here, and at the moment the market just entered once again into this area. Now, there is definitely the possibility for a deeper test of the zone, so to see a bit more bullish price action before then getting rejected to the downside, because as we can see also in the past, the market previously went for a way deeper test of the area, so we could expect the same thing to happen also here. So a bit more bullish price action could be expected, but we cannot forget that this is incredibly strong resistance, so at any time the market could be rejected to the downside. Going down on the weekly, what do we see? Now, from a weekly perspective, what we can notice is that at the moment the market is testing and already actually started to reject to the upside this quite strong previous weekly resistance, which now that the market has broken it to the upside and is currently retesting it, it is retesting it as support from which bullish price action could be created. So from a weekly perspective, everything seems pretty bullish. Going down on the daily, what do we see? Now, here on the daily time frame, first of all, I did speak about gold a few days ago when the market was creating this M pattern. From here, I made a full breakdown explaining all the reasons for which we could expect this rejection to the upside. And by the way, I will link in the description that previous analysis, so you can go and check it out for more free education. However, at the moment, what we can notice is that from a daily perspective, the market has now essentially got stuck in a range. We have the top of the range here and the bottom of the range, which is at this low. Now, until the market will remain in between this resistance and support, we can expect more sideways movement for the market and for essentially this market to continue to move in this range. However, things would get quite interesting if we would see a break either above or below this range. Now, if we look at the movement, how everything started, we had a clean impulse and correction. Now, in general, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse. And this shows us how the first correction was to the 50%. Then we had another retracement to the 50%. And then the next one, the market essentially stopped here at the 0.32. Now, this shows that essentially the market is now starting to create some minor higher lows, showing that it seems, at least at the moment, that buyers, even though the market is in a range, are in control, which means that there is the possibility to see this market to potentially break the high of the range, which at that point would create definitely a quite interesting move, because at that point, all the previous resistance, so the top of the range, would actually become support. So we don't know if the market will manage to break the top of this range, but if we do get the break, after the break on the retest of the previous resistance turn support, this is where we would have quite interesting probabilities for a potential rejection to the upside. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data specifically for gold, what we can see here is that hedge funds with the last reports, so institutions, have been increasing their net positions. We went from having 98k net positions all the way up to having 158k net positions, showing how longs went from 208k all the way up to 237k, so huge increase of the longs on the institutional side of the market, with an extra 7,000 longs added with the last report. And shorts, we can see how they have been decreased. We went from 117k all the way down to 79k, with also 11.2k shorts closed with the last reports. So gold is definitely getting stronger. So we don't know if we will get the break, but if we do get the break, after a break on the retest of this previous resistance turn support, how we could be approaching a potential rejection higher. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection to the upside for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries, this kind of things, you want to learn more, I really suggest that you go and check out the mentorship program, which you can find at transparentfxtrading.com. In fact, now completely for free, you have the possibility to gain access to all my courses with all the rules of the strategies. You also have the possibility to integrate with one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is the one that we used precisely in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you continue to scroll down, you will see that directly from here, by following these 3 easy steps, you have the possibility to get free access to the mentorship program. So I really suggest that at least you go and check it out at transparentfxtrading.com, and I will see you in it. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis, education, and updates for all of you, and I will see you in my next breakdown.